Okay, this is a Wednesday, May 16th, and I'm going to show you a indicator from processtrading.com using the right edge trading system. And in particular, we're looking at the S&P Emini 1500 tick bar chart, as you can see right here. And the only thing I wanted to show you here real quickly was the difference between the Intergy indicator in processtrading.com, which stands for internal energy, and regular volume bars. Now, to make it even close, I have color-coded the volume bars, so at least you know which ones had an up movement to it and which ones were down. But the question here is, when you just look at these volume bars, and you can associate them with price, what do they really tell you? How can you use those to trade? Well, it's just exceptionally difficult. So in processtrading.com, what we've done is we've measured the internal energy. In other words, we look at the demand and the supply. The green bars of the histogram indicate demand, the red indicate supply, and the gray bars, whether they come after the green or the gray, indicate weakness is coming in. So I want to show you how you can read the Intergy indicator and why it is a better proxy for volume, and then you won't need to read volume. Now, I can also say that volume is a component of the internal energy as it's measured here in this indicator. But volume actually is a component of the whole trading system, because the whole trading system with all its indicators revolves to some degree around the VWAP. This is the process trading VWAP, and it's color-coded, and there's other explanations of the whole system, whether you're using the VWAP for trend trading or the Intergy, the cinnamon oscillator, and the short-term trend oscillator for discretionary or contrarian trading. But the main thing I just wanted to show you here is the difference in the intuitive level of being able to read what's going on volume-wise, and doing that with the proxy for volume, the Intergy indicator in processtrading.com. So here we see we just got over a period where demand had come in, and now we're looking, we see price going up here, but we're looking at the energy indicator and we see demand start to come in. We already see that supply is waning right here because it's heading up. And now we get indications right here that demand is coming in. Now, right at this point right here, that's this bar right here for volume, there's nothing particularly special about this volume bar. Very hard to tell, is at this point price going to continue to go up, or will it go down, or you just can't tell. But you can say that, at least looking at the volume bar, that it did occur on a positive price bar because the color is green. You can at least tell that. But the whole thing in trying to trade the E-mini or any stock is to be able to forecast and see intuitively what is going to happen next. Like the next bar in the volume here went down, but as you can see, the next bar here on the Entergy indicator went up, and they continue to go up because demand is coming in. Even though on the volume bars you see red bars here, and then I guess you try to associate that, well, it's a small range, it's a lot of effort, little reward for the bears, or something like that. It's very clumsy, very awkward, and very ineffective trying to read this volume bar. Whereas in here, we see the energy, the demand come in, and right at this point here, we see that demand is starting to weaken. And it actually does weaken all the way over to here. And we can see that weakness in just a consolidation type of pattern here. The price doesn't actually move way up or way down or anything. So we can see that consolidation happening over here. And price weakens, supply never really comes in. Even though in your volume bars you did have red down here and it showed up on here, you didn't see that in the Entergy because the internal energy never drove it to a supply indication where the bars would be red. So you have that weakness come in, and then you have the internal energy turned green again here, which means demand is starting to come in. And demand did start to come in. As you can see, it went over to here, right here, on this line. And then weakness starts to come in again. So you can just read this like a book or, whatever. You can tell when there's demand, you can tell when it's weakening, you can tell when there's supply that has come in, you can tell when that's weakening, because the trading of supply and demand, it takes a little bit of time for those things to exhaust themselves, and you just don't see that in normal volume bars. And even worse, many times on many platforms, the volume bars are all the same color. It's even worse to try and read. And so here we see demand coming in again, and it goes up to here, and then then a weakness starts to come in, and it shows itself as supply here. And now we'd be looking for the supply to dissipate and strength come back in. So you can see how this Entergy indicator is a much more effective and intuitive read. Now, when you combine that with the cinnamon oscillator and the short-term trend oscillator, as well as what the price bar is doing in the VWAP and everything, then you really, really have a complete package of what price is doing and how price is going to move. So, at any rate, I just wanted to show you that with the volume bars and why the Entergy bar was a better proxy and will give you more effective trading and interpretations of when to enter and exit trades. So, well, that's it. And quick little video. And if you want to see more, you can go over to processtrading.com. All the indicators are explained over there. The whole system is explained over there. If you're interested in more of this type of detail, you can subscribe. And I'll catch you on the next video.